Hello, ladies and gentlemen, friends. Uh, let's have the privilege to welcome you on to our first webinar series. Basically, Dr. Rahul Tiwari Financial Academy. It is a kind of one of the unique academic concepts that we are trying to introduce in India. And we are actually committed for the financial freedom of everyone who are actually a part of our academy or willing to part of our academy. We are under the flagship of Fidelite Global Financial Academy Private Limited. If you want to know more about us, you can go to our website, which is www.drrtfa.com. Basically, we are trying to empower the general people, the kind of people who don't have any particular information about the stock market here in India or around the world. And they think that it's a gamble or something else. But we would like to tell them that it's not like that. And people have made their fortunes onto all this. So let's see basically what it is and what we do basically in our academy. I have to put a disclaimer because this training is for educational and the awareness purpose only. It is not intended to be advice, or we are not making a recommendation of any kind whatsoever. We have mentioned this talk, all the company names, just for the illustrations and the purpose for you to understand the concepts properly. And investors should be cautious before investing in any and all stock mentioned here. Please use this material for your own awareness purpose only. Let's proceed. So basically the structure of this seminar is we will see what Indian stock market is, and basically what are the hard realities of this market, and what the tools, basically the income generation tools which are available in the market. It's not simple just the share. Many people believe that the stock market is a place where you go and buy and sell shares. It's not like that. It's a part, but it is much more than that. We'll also touch on what an individual needs and desires are, what a person needs to be in his life, and what his goals are. And we'll see what kind of instruments are actually present in the market which you can trade. And most importantly, we'll see what is the undergoing backstage dynamics of the market, which a person needs to know to be profitable in nature. We'll see what kind of trading styles that a person can have, whether it's intraday swing or the positional or simple investing. And for a common man, what are the skill sets that is required actually to make money in this market? So if you have any question, please feel free to ask me after the talk, after this talk. So basically, what's our academy objectives? Basically, we are here to spread the awareness in the investing and the trading community, basically put them into a right path with the proper tools, proper knowledge, proper information. And so as many as people we can train and mentor. And the bigger goal is for a common man who don't have any other support, how he can become financially free through proper concepts, and what are the skill sets and the qualities a person needs to become a professional trader or an investor. We are also looking for 20 professional traders for our own group, whosoever they will trade our own money and with our own unique style. And we have a very big mission that if we're gonna put this all kind of this information and the proper skill set to at least 1 million people in India. And the people who are actually will be joining us or in our program, they have a lifetime mentorship. We will be there for them for their whole of the life in case of any difficulty, any problem, or whatsoever for rest of their life. I think that's very much required. You need the mentors, or you need someone whom you can talk with your problems or anything if you're not understanding something. So we'll provide all those things. So let's see what the outcomes of this stock market is. Many people treat this as a second source of income, and some of them, they also trade this as their primary source of income. So there could be four outcomes of the stock market. You have a profit, or a big profit, small loss, or the big loss. We are okay with the above three. Like if you make profits or big profits or you make small losses, that's fine. That's a part of this market. But we are not anyhow okay with the big loss, because that's eventually become the mother of all loss, and whatever you have earned, it's gonna be in vain. So we are okay with the above three, but we hardly try to have that big loss. Having said that, the stock market is actually an entirely different field. You don't need to be an engineer or a doctor or a professor to understand this. And that has not been taught anywhere in this world as in terms of the academic subjects. And in the whole, the mechanism of the stock market is actually quite different than the cash market or the bond market. And our main aim is to basically give those kind of different information about the stock market, so that the people will become financially independent, but they should understand it first. As a wise man said, you can have a lot of earnings, but before that, you have to do a consistent amount of learning as well. To clarify and differentiate from others, we are no tips provider. We don't believe in any kind of tips. No recommendations. We are not recommending anything to you, like the buy or sell, those kind of things. We have no magical software to sell, which gives you the buy and the sell signal on a random basis. And we have no secret method. Actually, there is no holy grail in the stock market. Depending upon various conditions of the market, you should be equipped with the few more of or few other weapons or the other strategies which actually gives you a kind of information or the power to actually how you can tackle with the market in those market scenarios. Let me describe myself, who I am. Myself, Dr. Rahul Tiwari. I have done my MTech from BHU, and I was the gold medalist in my batch. Then afterwards, I have also done my another master's from Heriot-Watt University, United Kingdom. I have also done my PhD from Germany, and I have roughly 20 years of overseas experience, mainly in Norway, UK, France, Germany, United States. I have worked with most of the oil majors like Shell, Total, Statoil, Schlumberger, Petrofac, Reliance. I'm basically a financial advisor and the wealth planner in my academy. And I'm a professional trader in equity, future, options, commodities. So basically, I trade all the set classes. You can see in the picture some of my friends who are actually based in top financial organizations like JP Morgan, Morgan Stanley, and all those places. So a person can ask, why you want to trade or do you want to invest? So let me highlight a few points. First of all, you don't need any prior experience. You don't need to be master on something. And eventually you can start with a very small account. You don't need to have big money and then only you can start. And more or less a very small time investment you need to give to the market. Basically what you do as your day-to-day job or as your day-to-day business, you do that. But you just need, in my perspective, half an hour a day, and that's it. And you can make money in any directions or the sideways market. Most of the people believe that if a stock can go up, then they can only make money. But that's not the case actually. There are instruments which gives you the money in all the direction, whether the stock price go up, whether the stock price go down, or whether the stock price stays at the same price. So if you are equipped with all those three directions, and these three directions could be the only possibility, so definitely you will make money in all the directions. You can trade from your home. You don't need to go to somewhere to do few businesses. You can have your own decisions. You would like, you can trade in the morning, you can trade in the afternoon, you can trade in the evening, and be your own boss. There would be no one who is actually watching you and telling you what to do. And actually, as per our inflation rate in our country, it's skyrocketing. So if we would like to beat the inflation, then only this is the tool which can actually beat the inflation and keep our money grow. And in this regime, there is no retirement age. Even in your 90s, you can pay your hospital bill just by trading on the mobile. Hey, doctor, wait, I just have to put some trades and you'll be done. The only thing is required, it's some of your mental hard work, which eventually becomes so easy because you understand the dynamics and the behavior of the market. So you basically understand what's going on back the state. It's not like what you see on the charts or somebody tells you. You have your own capability so that you know what's going to happen next. So if you would like to go into our program or willing to part of our group, so what you can have, basically 20 to 40% growth in your portfolio. 10% you can have from your intraday trading as a monthly income on your invested account. You can trade or invest part-time or the full-time, depends upon the time availability. And basically we are looking for big moves. We are not very much looking for 3, 4, 10, 20 moves profit. So if we could be in a position to find out those moves, we are done. And we'll see how you can actually trade the derivative market with very less capital required. And you also see how you can make money when the stock market is actually going down. And you will develop basically a scientific understanding about the market, how the market originates, what are the greeds and the fears that are actually dominant on the price, and how you actually interpret them. We will do multiple time frame analysis. We'll have a top-down approach. We'll go from the higher time frames and then eventually trying to find out our trades for our execution time frame. And everybody is different. So everybody has their own risk-taking capacity. Everybody thinks differently. Everybody reads market differently. So basically, as if you treat this as a business, you should have a plan like in any other businesses. So you will have those plans for individual personality as tailor-made actually, which suits them basically. And that's how you will minimize our risk and maximize our profits. So basically, nearly 80% people lose money, right? Maybe, or maybe 90% people lose money. That's a sadistic remark, but actually it excites me. Why? Because then who are the rest 20% people? So they are definitely doing something which is different than the other 80 to 90% people. So we need to try and try to find out and acquire the skills which are actually tailor made for those rest of the 20%. If we could try to identify what those 10 or 20% people are doing, we will be with them and we'll actually move from that 80% to 90% population to those 10 to 20% populations who are winning. And by the way, because these 90% people are actually losing money, so those 10 or 20% people, if they are making money, they are making huge amount of money. So we need to have the transformation from this side to the other side. And who are them? Actually, the people who understand the mechanism and the dynamics of the market backstage. What's happening? What's the cause of that's happening? Why the price is moving up or why the price is moving down? There should be an approach to understand about those price movements. So that's the skill set, and that's the key actually. And of course it's not an easy thing, but they have done the hard work and they have given their time to acquire the necessary skill set which will remain with them for rest of their life. And most importantly, they have a professional attitude. Stock market, it's not a place for a casual approach or by luck or by the gut, or I think that this will happen. No, this won't happen actually. So basically, there are some of the barriers for the successful trading. Few of them are, I will just mention, like refusing to take a loss. Many people don't prefer to take the losses. They think that the price will go up or down and somehow they can actually manage their average price, but that's a blunder mistake. Many people don't have any trading goals. They just trade randomly, like, okay, let's buy something, sell something, or something like that. Most of the people, they don't understand what is the risk involved in any kind of their trades. And more often, they actually depend on someone else. They have a dependency on others. They don't have any emotional control, and their obsession actually is to be right. And they have no seriousness. They just trade it like it's for fun or something like that. And eventually the result will come, of course, as per their approach. You can assume the results, they always lose the money. For us, actually, how you can actually create your wealth is, for us, it should be consistent in amount and consistent should be in frequency. Like in this example, say if you have invested 1000 INR and with a 5% rate of interest, and say what is actually the normal rate of interest right now in the bank, then after 25 years, your 1000 rupees become 3390. So just this. But if you actually not to double or triple or something like that, if you just simply compound your money with 20%, and then after 25 years, your 1000 rupees will become 95,400, more than 900% return. So that's the power of compounding. We should have the goals. We should have the targets like, okay, I would like to have my income grow at least with the rate of 15 to 20%. That's the target that I have in my mind. And I'll just go with that concept, right? So what a person needs actually in his life, they need good relationships. Everyone around them should be happy. They have a peaceful mind. They absolutely willing to be quite peaceful, good health, very much required, positive energy, they should have a positive energy, and financially independent. And believe me, if you are financially independent, then actually you can have a good relationship with your family, friends, all the relatives. You will have a peaceful mind. Of course, you will have a very good health. So, to become a financially independent, it's very, very much required nowadays. To become a financial independent, you have to have a balance between your incomes minus your savings and your expenses. And inflation, actually, in our country, the inflation rate is something in between 15 to 18%, which is quite big. And the instruments which are available as per now, they are actually not beating that kind of inflation, like if you invest in FDs or in post offices or anywhere else. There is a rule of 72. What is that rule of 72? Say, if you would like to double your money, so if you have, say, a 1 lakh rupee, then if you just divide this rule of 72 with the kind of the money you have, like if you would like to invest this and for 8 years, then the 72 divided by 8 will gives you a kind of information about how much years are actually required for you to double your money. And as said, compounding, it's a very powerful and extremely good tool. So we need to have small targets, and we need to have those small targets. We need to have the money, but we need to have the money consistently. So as Mr. Sachin Tendulkar has said, it's important to work hard. There are no shortcut around that. We will see that Sachin Tendulkar, legend of the cricket, he is quite famous, but we discard what the kind of hard work that he has done to go to that particular stage. So for you to become a trader, you need to develop that necessary skill set, how you can make money, how you can become an independent trader, so that you don't have to work or you don't have to worry about your retirement age. You don't need to have to be supported on any pension system. So basically, what we believe that it's your money, it's your responsibility. You have to take the responsibility on your own shoulders, and it shouldn't be necessarily depending upon anybody's tips or the gut feeling or someone else's advice. And we believe that there is no shortcut method of making money exist in this world. And believe me, there is hardly any competition involved, because in the markets, nobody actually takes this pain to learn these skill set. So if you take the pain to learn those skill set, which is going to be your long-term asset, you are well above than those people who are actually in just that 80 to 90% bracket. So we believe you don't need anybody to make money for you. It's your money. You are responsible. You should make the money by your own. For that, you need to have that necessary skill set. Let's see some of the myths in the market. Like, all advisors are the same. People believe that those fund managers, they are all the same. But if you see the performance of those fund managers, it's quite changing yearly and quarterly. So it depends upon their approach, how they do. People believe that gold is the best investment, which is not the case, because once you need, then you find it difficulty to sell, or you'll have a bad investment results. Bond markets are the safe, basically government securities. No, they aren't. They are also as susceptible to as any script in the stock market. If you invest your money in five-star funds, they will give you the good returns. It's not necessarily, because if you check the performance of the five-star funds, at some particular point, they have given you handsome returns, but on the other year, they are on the lower bracket. So it's not necessarily that five-star funds will give you always good returns. Only stay long enough to make money. People believe that if they buy something and if it goes down, then they should hold it for a longer period of time and eventually price will come up. Yes, that could be, but in 3 to 4 out of 10 cases. But what about the other 6 cases when it won't reach to their average price? So there are few companies like in our Nifty who are supposed to be the best companies at that particular time. But right now their share price is 3-4 rupees only. And people have bought those companies at 1,000, 1,500, and still they are holding till the price of 3 to 4. So it's not like that, that if you buy and hold, that will work. So we need to be aware of all those myths that are actually present in our market. So let's see what actually we can do. We have different products like equity, or the cash, or call them stocks. We have derivative products which actually derive the information from the equity, cash, or the stocks. In derivative products, we have futures of stocks or the indexes. We have the options of stocks or the indexes. We need to find out, actually, all the derivative products are quite leveraged. So we need to bear in mind what is the risk associated with them. And I like options because I think these are the best product in the derivative segment. But they can actually double your money in a single day if you utilize it properly. But before using that, you need to understand all the concept about the options, basically the intrinsic values and the time values. So let's deal with them one by one. What I mean with the trading stocks. Stocks, it's an investment product. You can only make money if it goes up. It's a unidirectional product, means if you buy something and if it goes up, then actually you will be in profits. You need to pay full amount. Like if you want to buy 500 shares of Tata Steel, which is of roughly around 500 rupees. So you have to pay 2.5 lakhs rupees at front. And you will suffer very big losses if it goes down, right? So it's a product, and most of the people actually use this product because they don't know about the others. So let's see what others we can do. So this is about the futures. The futures are actually the indexes or index contracts or of any stocks contracts, which are actually in the derivative segments. In this product, actually, you can make money in both the directions, like if the price go up, or in another way, if the price goes down. In cash or equity, we don't have that capability that if the price is going down, but in futures, you can have the capability so that you can make money when the price is going down. And believe me, friends, when the price is going down, then it's quite sudden, it's quite fast. People don't have time to react, and you can have quite big movements in the short direction. And say if you have a good amount of portfolio, then actually you can use this instrument for the hedging, and that's how you actually protect your portfolio. Very less capital required because these are the leveraged things, so you need less capital to trade with them. And this actually you can use for your intraday trading, and you see how the money can be made on the daily basis. The third product, which is options, I like them very much because the price can have only three directions. It can go up, it can go down, or it stays where it is. So if you have a product which makes money for you in all the three directions, most of the time you will be ending up making money. So in this also, that's a derivative product, and they are leveraged more than the future. So very less capital is required. And these instruments, the call and the put options, you can also use for hedging your portfolio, right? Another product, it's the commodities. In this, you can make money in both the directions, where whether the price go up or price go down, basically bi-direction in nature. In India, we have 9 major commodities, which can be easily trackable as in the comparison of the 3,000, 5,000 stocks. You track them properly, you do your analysis on them properly, and you can make profits. As the commodities, the examples are like gold, silver, copper, lead. It's a Forex. Another instrument product, it's the Forex, which is basically the currency market in short. Here you can also make money in both the directions, whether the price will go up or price go down. And in India, we have certain restrictions of the government so that we can have only 4 major currency pairs, mainly USD INR, JBP INR, or the GBP INR. And it's actually a very huge market around the world. Basically, the $5 trillion transactions are happening. And this market is open for 24 hours in various different exchanges of the different worlds. So let's see what is actually you need to know to become a professional. You need to understand what is the dynamics, what is the backstage thing are happening in the market. You know, there are millions of buyers and the millions of sellers. It's a concept of demand and supply. It's a concept of the fair value and the emotional value. And whenever there is a difference in the fair value and the emotional value, the trading opportunity arises. You need to know when to buy and when to sell. And if you know it professionally, you will always end up with making money. And by the way, you don't need to be right every time. If you do your proper risk management and the position sizing, if you are, say, wrong in half of your trades, still you will make a handsome amount of money. It's the market actually, it's a place of collective intelligence. What the crowd is thinking about that particular script or a product, it is much more important rather than what an individual person thinks about it. So you don't necessarily to be an intelligent than the others. You should work as of a team, as of a collective intelligence. There are two things you need to know. The one is the fundamental analysis, basically, which gives you the information about what to buy or sell. And then you need to have information about the technical analysis, which gives you the information when to buy and sell. And they have a correlation. So, and the technical analysis, actually, you can see pictorially on the charts the movement of the price with reference to time. And actually, on the other way, it's actually the representation of the fear and the greed. So whenever people are becoming too greedy, the price is going up, up, up. And when the fear, there's some kind of misinformation about that particular strip, then the price started to going down. So you can see them psychologically how actually the chart moves. And fundamental analysis, we'll see what it's there in depth in our program. It's basically the language of the balance sheet, the numbers, the ratios, and all those things. In market, actually, there are unlimited number of opportunities. A person actually can't trade all of them at the same time. But there are some opportunities which are of high probability in nature. and there are some opportunities which having a less probability. So we need to concentrate on those high probability opportunities and trade them accordingly. Remember, if you trade everything, or if you trade uh, as if you indulge actually your ego into the market, that I'll make my, say, if you lost few amounts and you think that I'll, okay, but I'll get this back from the market, and I'll do the same mistakes again and again, not realizing what's the problem in your trading style, or what the thing that actually you are doing were wrong. You end up doing same thing again and again, and you end up losing all of, or you blowing whole of your account. So whenever you are entering into a trade, you have to find out what is the maximum risk that you would like to enter into this particular trade. That has to be known beforehand once you put a trade. Basically, all three things, your entry, your exit, your stop loss, your profit target, should be known to you before you enter any particular trade. So if you do this methodologically, then eventually the profits will come. And please don't allow your small losses to become mother of all losses. If you kill your small loss at instance, then actually, first of all, your money will be free, and emotionally you will also be free, so that you can concentrate on some other opportunities and utilize your money properly to those plus. In stock market, it's a continuous process of learning, understanding yourself and the market. If you invest on yourself, basically try to understand your weaknesses, your points where you act emotionally, that is very much required in the market and as per your market information, because you know what are your weak points. So if you know your weak points, then actually you can do and try to resolve them. But if you don't know, and if you're still doing the same things, then eventually, you know, the end of the results is actually as the same as on that 80 to 90% of the time. You don't need a very big amount of capital to be in the market or to stay in the market. You should come with a less capital. You should try to understand the mechanism and the dynamics of the market, and from your profits, you make your long-term portfolio. And for that, you need to actually trade on both the stocks, the derivative, simultaneously, so that you can actually try to figure it out in all the three directions how you can make money. So basically, the knowledge could be acquired from various YouTube videos. There is an abundance of the information which is present nowadays over the internet. You can read lots of books on the technical analysis and the fundamental analysis, but there is a strategic difference in the knowledge and the applied knowledge. Anyone can read few books and become a master, but that's just for speaking, right? So what you need to have, it's the applied knowledge. You need to be in the market. You know the pros and the cons. You know what the skill set that you need, and you should apply those skills live in the market, so that actually you can see how they are interacting with your personality or with your emotion. And as I said, your professional education, whether you are an engineer, doctor, a businessman, a teacher, it doesn't matter here, right? It's a completely entirely different field. So you need to have those kind of skill set which actually gives you a kind of sense self confidence and all the information as a professional trader which a person needs to become a professional. In our program, we have tried to make it kind of Indianized and, of course, and quite an affordable system for everyone. I have invested heavily on myself in last 20 years. I have attended all of the world's best courses. I have met with the individual trader, the great ones, the Daniels, the Craig Stickers, the John Bollinger, one to one. we have an integration with them one-to-one, and I have worked with them. That's how I realize actually how the stock market works in terms of the backstage. So what we see is actually it's not happening at the time. We need to have a very big picture in the mind, what's happening globally, what's happening to our country or economy, and then that's how we need to start to find out our high probability trades. So if you are interested to learn those things, you are very well welcome to our academy. And rest assured that we'll take you to the path where you can actually become the financially free, and you will learn the art of money making. And also, if you learn the art of money making, you can manage your time then, and also give most of the time for your loved ones and the family. So what the big picture actually, what actually influence your stock price? It's not the price of the company. Many people actually concentrating about the company, how the company is doing, what its earning reports are, what's the ratios are, or anything. But 80% of the price of a particular company actually depends upon the economy of the country in which stage it is. 40% actually depends upon the market conditions, what the conditions of the market, whether it's a bullish market or the bearish market or the sideways market. And rest of the 40% actually depends upon which sector it belongs, what particular sector it's doing at that particular market conditions. And that's how you derive the price. So basically 80% of the price movement of any particular company depends upon the market conditions and the sector in which it belongs, rather than the actual price of the company. And if we see the economy in a big picture, it has the expansion and the contraction cycle. So you can see from the graph that this is an expansion cycle, then it reaches euphoria at the boom, then it started recession, it goes to the depression, and then it started its individual journey. So this the contraction and the expansion economic stages can also be derived with few other parameters. Like when it's on the peak, you will see that interest rates started falling, and in the contraction stage, the bond prices will rise, and also the stock price starts to fall. And during the early expansion phase, the stock price again started to reverse, start to be on an onward journey. And also when the stock prices are rising, actually, then the government securities, they have started falling. And then once they actually onto the peak of their expansion cycle, then interest rate again started to rise. So that's how we can see and try to determine that which state of economy we are, and that's how we actually derive our trade directions. That's how we actually go and select our sectors. And in different sectors, like in expansion and the contraction, certain sectors, they do well, and certain sectors performs worst. So we need to have a company in a very well-placed sector which is performing good, and we need to have the best company in that sector to go long or to buy. And we also need to have the worst sector which is supposed to perform very bad during that particular market stage, and we need to select the worst sector, and amongst that the worst company which is performing at that particular market directions, and we to be go short on that. So that's how actually we need to try to find out from the top-down approach, from the economy of the country, the market conditions, the sectors, and that's how we actually go and try to find out our high probability trades. So this is one part of our information about the Dr. Rahul Tiwari Financial Academy. We'll see in another part how actually this journey could go, and how actually with some examples, how you can become a professional and a financial independent trader. and we'll see in the second part. So please, friends and ladies and gentlemen, please tune with us, and we'll be just coming back in half an hour. Thank you very much.